Alright guys, in today's video I'm going to be showing you what is external liquidity versus internal liquidity and how to use it in your trading. So all external liquidity is simply just highs and lows, and internal liquidity is things such as internal highs and lows and also imbalances or fair value gaps where price will trade into to continue to go in the direction that it wants to. And with understanding internal and external liquidity, it will allow you to make better trades with your confluences to understand where price is going so that you can have the highest probability setup. So let's go ahead and see how we can look at internal and external liquidity. So as you guys can see right here, let me go ahead and just move this out the way. If we go over here, we're going to first identify what is our external liquidity. So external liquidity would simply just be these lows. If we mark these out, there's all of these lows being generated here, and these would all be considered external liquidity. And then just draw them out just a little bit more. These would all be considered external liquidity. And if I wanted to be bearish on the day, I would be aiming for these external liquidity levels. Let me go ahead and draw these out just a little bit more. I had the bias of wanting to be short today. I would be aiming for these external liquidity levels, which are basically just the lows of these different moves that had price expanding. And therefore, as you can see, during the pre-market, the price, we had all of the highs, which are the external highs, taken out. So therefore, because we accomplished the objective of taking out the highs, that means our next move is most likely going to be to move out lower and to start taking out these pre-market lows and move lower down with price. So with that being said, let's go ahead and see what ends up happening here. Since we already had the objective of taking out the external highs, let's see what happens when we start balancing in and start going towards lows. Now, another thing that you need to understand is that price is also going to move to internal liquidity, which is fair value gaps and internal highs and lows. So as we are moving towards these lows, and if I'm short for today, I want to see price disrespect bullish inefficiencies such as bullish fair value gaps and start heading lower to show me that price is bearish and wants to take out these external lows. So let's go ahead and see what that looks like. All right, and as you can see, as price opens, it starts to aggressively move down towards these external lows because it already took out all of the highs, and now it wants to start seeking for internal liquidity and starts disrespecting bullish fair value gaps and so forth within here. And as you can see, price automatically starts to gravitate towards these external lows or external liquidity. Let's continue to see where price goes from here. All right, let's pause right here. As you can see, price continued to go down. It did take out these lows. There is one more resting low down here, but it did take out all of these lows here. Now, what do you see price doing here? You see price took out these lows, and now it is starting to rise a little bit, meaning that now since it has taken the objective of these lows here, it is now seeking for internal liquidity. Internal liquidity is bearish fair value gaps, bullish fair value gaps, and so forth. So price is slightly pulling back, and if we are still going to be bearish, we want price to respect these bearish fair value gaps, and this can be an opportunity for you to take a trade as it is seeking internal liquidity, which is bearish, this bearish fair value gap here. Let's see what happens when price taps into this. Boom. And as you can see, what did price do? It seeked internal liquidity so that it can basically fuel the rest of the move for it to go down to take out this low. So what you want to look at for internal and external liquidity, you just want to look at it as fuel for the market to be able to continue to go in the direction that it wants to go. Sometimes the price is not always going to just continue just to tank. Sometimes it needs to have a pullback, seeking internal liquidity so that it can continue to go down and complete the objective of taking out these lows. So that is how you identify and look at internal and external liquidity.